FriYay, everybody! It's your Rate Slayer, Buffy. Yep, that's me, and I am back with the third episode of the April 2022 Weekly Market Insight Series, directly from the Capital Markets Trading Desk at SunWest Mortgage Company. Corporate earnings diversified investors' focus, but geopolitical and inflation risks still weighed heavily on sentiments. Price pressures continued. So, finally, we wound up a holiday-shortened week with a busy yet dramatic ending. Treasury yields climbed back to their highest levels of several years and sent equity index futures convincingly back to negative territory as investors continue to assess the path of inflation and digested losses of some big corporations. Putin said peace talks with Ukraine are at a dead end and vowed to continue Russia's invasion as Kyiv accused Moscow of sabotaging the negotiations. U.S. consumer prices rose 8.5% in March from a year earlier, marking the biggest increase since 1981. Evidently, the war has raised food and energy costs, pushing headline inflation further away from the targets. Federal Reserve Governor Lael Brainard said the U.S. Central Bank will move expeditiously to raise interest rates and return surging inflation to its 2% target. So what else is under the surface? Oil prices are obviously exceptionally volatile at present, thanks to the situation in Ukraine and also to conflicting signs for demand from China as it deals with its latest COVID shutdowns. The International Energy Agency trimmed its estimates of global crude demand. As COVID restrictions are waving off, Americans are expected to drive more and burn through 9.2 million barrels of gas from April to September this summer. Gasoline retail price is expected to be $3.84 a gallon, the highest since summer 2014. President Joe Biden temporarily allowed earlier exempt higher ethanol gasoline sales this summer in an effort to lower fuel prices and counter the political blowback from them. Relations between the U.S. and China have worsened in recent weeks as Russia's invasion of Ukraine has extended geopolitical tussle between the world's biggest economies. Treasury Secretary Janet Yellen delivered a pointed warning to China on its alignment with Russia this Wednesday, suggesting potential economic consequences to the nation from the international community. Mortgage rates continue to shoot up. Mortgage applications for the week ending April 8th fell another 1.3%. Purchase applications did tick up 1.4%, but refinance applications fell another 4.9%. Prices paid to U.S. producers jumped over 11% in March from a year ago, by the most in record back to 2010, topping all estimates and underscoring persistent early-stage inflationary pressures. Before COVID-19, e-commerce was a haven of discounts, but the pandemic has turbocharged the boom in e-commerce, adding pressure on prices and transportation costs. Online prices in the U.S. rose 3.6% last month from a year earlier, matching February's record high. New York City faced a morning rush hour incident this Tuesday at a subway station in Sunset Park, Brooklyn. At least 16 people were injured, including 10 people with gunshot wounds, during the chaotic movement. Thankfully, no casualties were reported from the incident. About 30,000 new COVID cases are being recorded in the U.S. each day, and the figure is increasing at a sharp rate. The travel masking rule, previously due to expire after April 18th, has been strictly reinforced and extended for 2 more weeks till May 3rd. China imposed severe lockdowns to contain the country's worst COVID outbreak since early 2020, again battering the economy and halting spending by millions of people who are currently shut in their homes. The U.S. ordered all non-emergency staff at its Shanghai consulate to leave China. Initial jobless benefit claims rose 18,000 to 185,000 for the week ending April 9th, 2022. U.S. retail sales rose a mild 0.5% in March, but high gasoline prices and inflation are taking a toll on U.S. households. While there is plenty of uncertainty in the global economy, inflation has increased significantly and will remain high over the next coming months, mainly because of the sharp rise in energy costs. We will have to see whether Fed comments would frighten more or calm the nerves of the investors in the upcoming days. So that's all we have for the week. Please join me again for more market updates, figures of various important economic data, updated status on geopolitical nervousness, and much more. Stay updated with our news, and our trading desk will keep you informed with pricing incentives. Have a great weekend. Buffy out.